Hello and welcome to Crypto Weeklies. In this video, we are going to discuss the price analysis and forecast for Stellar and its token XLM. None of the content is financial advice. This is the machine learning based price forecast that we will be covering up. Apart from this, regression analysis and a risk-based model to analyze XLM price and also the technical levels and the estimated bull run target at the end. So if you like this content, please give a like and subscribe. Right now the price of XLM is coming in at around 25 cents. Again, it is at a key juncture at around slightly lower than the 20-week moving averages at around 26 cents and both at around 26 cents, the 20-week simple moving average and the 21-week exponential moving average, both at that level. Currently the price is squeezed between the 20-week moving averages and the 0.23 fib level from its 2021 high to the 2022 bottom. That level is at around 23 cents. The price is slightly above that 23 cents level. If it were to break out of that the lower structure that the 20-week moving averages have been offering as a resistance essentially since about March of 2025, then the next target is at around 34 cents if that there is a breakout from the lower high structure at around the 0.38 fib level, and then the 42 cents at around 0.5 fib level. This time around, the monumental rally that Stellar and its token XLM achieved in early November 2024 from the prices of about less than 9 cents to all the way about 78 cents was close to 63 cents was at close to about 0.786 fib level from its previous all-time high. And these if you focus on this white line again, essentially since 2017 token has not made a new all-time high, but in the bull run on the post-halving years the price comes close to that between 65 and 70 cents level. That is the white line over here. And if it were to go to that level, it's about a 3x from the current slightly under 3x from that current price level of about 25 cents. Let's look at the machine learning based price forecast. The bull case for this crypto again in this the last 6 months of 2025 is forecasted between 30 cents all the way to about $1. So again, a dollar is still within the reach per the machine learning based model, again trained on the price actions since 2017. For this again, this week again ending on July 13th of 2025, the one standard deviation or the 68th percentile bull case is at 30 cents. The price is at around 25 cents, and this is without any euphoria in the market. This is the prediction. Again, one could argue that the euphoria for XLM is kind of behind us from that 9 cent from October to early December, within a span of one and a half month, a rally of about 5x. That kind of a vertical straight line price action again does not last too long, and the token takes quite a bit of time to digest that. So you can see over here a similar structure from January 2018 till about November 2018. Again, from you can slightly different from May 2021 till about January 2022. And usually these, historically speaking, these kind of a monumental rally break down to the downside. If that kind of scenario is ahead of us, the bear case for XLM is between 12 cents and about 22 cents. So 12 cents is about 50% drop from the current price of about 25 cents. The purpose of this machine learning based forecast is not to say if the price has to go up with time or down with time. Certainly the pink line helps identify some directionality. Again, this says, the pink line says that the trend behind the price action, which essentially relates to if there weren't many bullish or bearish catalysts, what is the price action were likely to do on its own. That directionality is again slightly bullish from about 27 cents to about 31 cents. So devoid of any major bullish or bearish catalyst, the price has a higher propensity of going up with time than down with time. So that's kind of helpful, but that's not the only utility of these models. The utility is to, regardless of what market throws at us, again prices can do essentially three things: go up with time, down with time, or stay sideways. That is determined by the market forces, but these kind of models help identify what is the one standard deviation ceiling in a bullish environment, where again there are instances where the models kind of make a 3 to even more than 3, between 3 and 6 standard deviation move, like XLM did from November 2024 to December 2024. But again, that is only the probability of these moves is only less than 0.3%, so about 1/3%. But in the normal course, for most of the cases, again for 99% of the cases, for this instance, for 68% of the case, the price action has a likelihood to stay within the 30 cents to about $1 to the upside, and between 12 cents and 22 cents to the downside. So that is something that this model helps identify. In terms of the regression based fair valuation for XLM, again the price has been coming down quite a bit, but the regression based fair value is coming in at around 47 cents. If the prices were to go to the intermediate or the eventual peak that they visit in the bullish territory, that is at coming in at around $1.35. Again, if one could argue that visit of the 2 standard deviation residual or the orange line has already occurred in December 2024, and this time around the price action could cap at around 1 standard deviation ceiling that is coming in at around 81 cents. So at this point, but again 6 months into the future, this yellow line could well be somewhere close to $1. That again points to a confluence across multiple models. Again, the lower end is between 65 cents and 65 cents and 70 cents. The 1 standard deviation residual regression based analysis is at 80 cents. The machine learning based price forecast is between 30 cents and $1 for XLM. All in all, the DCA or the regression based price color coded with respect to risk level, this identified the peak in December as well as again in May 2021, and we made several videos on this YouTube channel. Again, it's a growing community. You can see covered XLM a month ago, 5 months ago, again back in late 2024, that was around 7 months ago, when the price was much higher than what it is today. But again, the video showed that how the risks were elevated at this point. Again, takes into consideration the same polynomial regression based model. Right now the risk levels are about 13%, that is second best time to DC. Again, you can see this model can be helpful in identifying some of the low risk zones in terms of the price action for XLM, helps avoid DCA XLM, at least historically speaking, when the price is going monumentally up. And again, and the opposite of that is again whenever the price action has reached sufficiently bullish environment or bullish outlook is already behind of us between, let's say, 0.4 and 0.8 risk. In that environment helps identify if it's a good time to DCA out of the out of the asset. And now if the prices were to go between that 0.4 to 0.8 territory, the forecast is for XM is between 62 cents, again kind of confluent with that 3 all-time highs that we saw in terms of technical levels, between that level and about $1 and $1.08. That's the 0.8 risk for or 80% risk for XLM. So between 62 cents and $1 is what is forecasted per the regression based model for XLM. The simple moving average price based model, again the 20-week simple moving price based model, also identified this December 2024 peak. Right now, again per this model also, the risks are again second best time at around 20%. If they go to that level between 0.4 and 0.8 risk, again this is slightly more conservative, between 45 cents and about 62 cents. So what was the lower end in the other model is the higher end, the 65 cents, which was the lower end in that DCA model. In the SMA model, it's the higher end. So between 45 cents and 62 cents is predicted using the SMA model. The time weighted average price model says that again accumulation below the blue line in the bear market, again with the underlying assumption that the underlying asset has a chance to rally in the next bull run, again potentially in 2028-2029 time period, and DCA sometime again this there is a high likelihood, if the 4-year cycle theory holds, again if a bear market arrives mid to end of 2026, DCA below this blue line could theoretically be analogous to DCA below this blue line back in March 2022 till about October-November 2024. Right now the time weighted average price comes at around 18 cents. So that means there is some risk per this model to the tune of about 34% to accumulate XLM at this point. The estimated bull run peak again, with the three confluence of the three bullish model, the three risk based model says that the bullish peak could come if there is some euphoria in the market where the risk levels of all the three models go to about 95% risk, is at around $1.50, close to $1.50, which is about a 6x, slightly under the 6x of the latest price of about 25 cents. So with that, I would like to conclude by saying again, lower end forecast between 45 cents and 62 cents, the machine learning based price between, again, close to that dollar target, the estimated bull run peak at around $1.50 for XLM for the remainder of this bull run. And with that, I would like to conclude the video. Hope you enjoyed the content. If you did, please give us a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.